guys. Good evening, guys. You can see time is around 7:30. Let's look into today's Nifty 50 as well as Bank Nifty trade analysis. And today is Sensex expiry as well. So let's look into Nifty 50's trade analysis and let's dive deeper into Nifty 50 and see in case we could find out any potential opportunities to trade. So this is the Nifty 50 trade, guys. This is the pivot levels. This is the daily pivot level, guys. You can see the market clearly gapped down. And immediately after gapping down, the market showed some kind of bullishness, clearly signifying some kind of momentum towards the upside. And whenever the market gap downs and tries to move towards the upside, there are two scenarios you could expect. You can expect the price rejecting from these levels, the 200 moving average or the 21 moving average, in a 5 minute or in a 1 minute time frame. You can see price rejecting from 200 moving average in a 5 minute time frame here, or the 21 moving average here. Or in case if the market doesn't reject price over here, you can expect some kind of upward momentum. As today is expiry day, you can expect some kind of momentum in opposite direction. Opposite direction where the market initially was not planned to move. As you can see, there was a huge gap down, guys. You can expect a gap down of around 120 points. And after gap down, a lot of sellers might have entered, expecting the market to go towards the downside. And you can expect random sellers here because the market has gapped down and the bearish sentiment would have been. So to target all those sellers, the market has to go and target all those sellers, guys. And you can see this kind of momentum towards the upside. And since it is expiry day, you can expect some kind of manipulation. And the first thing what we do is to draw the mid of the first candle, guys. The green color line is here, the mid of the first candle, the anchor VWAP level. This is the daily VWAP level, guys, a black color line over here. This is the 5 minute zone. And you can see clearly the market broke this high and consolidated, rejected price from this anchor VWAP level and even broke this high as well, clearly signifying break of structure. And you can see after that the market retraced to this order block level. This is the order block. You can consider this to be a 1 minute order block where the market retraced to this order block level and formed another bullish candle over here. This is a bullish engulfing candle. And the market, again, after mitigating this order block, the market even broke this high, clearly signifying some sort of bearish, bullish momentum. You can consider another breakout structure. So if you try to plot the fib extinction levels, guys, the fib extinction levels of this zone, the common point between this to the common point between this to the common point between this, you can see you could have easily targeted the 2.6 level over here. This is the 2.6 level. And in case if you try to enter, you could have entered keeping your stop loss just at that level and targeted all the way to 2.68 level. This is the trade where you could have easily traded. Or you could have traded as long as the market is trading above the 9 as well as the 21 moving average. You can see this candle over here, which actually broke the 21 moving average as well as the 200 moving average towards the downside. You could have tried here, or you can see this kind of retracement and price rejecting from these levels, the 200 moving average, and trying to head higher. You could trial your stop loss all the way to this zone. Once if this level has been broken towards the downside, you could have easily exited. Or you could have targeted the 2.68 level or the 1.68 level or the 100% move. I hope you're getting what I'm saying, guys. You can see this is the day VWAP level and this is the pivot levels. And you can see clearly the market broke this structure with fair value gaps and imbalance candles over here. And again, the market here rejected price over here and formed small doji candles and took support from this order block levels. And this order block has been mitigated. And again, the market clearly broke structure towards the upside and market is trying to head higher. And the market reached all the way to 2.1 level, 6.1 level, and price rejected here. Here it formed another bearish engulfing candle over here. You can see this kind of bearish engulfing candle, clearly signifying some sort of bearishness. And you could have easily entered short position here itself, guys, keeping your stop loss just above that candle after seeing this kind of rejection here. Or you could have waited for proper retracement for you to trade. You can see clearly this momentum towards the downside, which actually broke this low. You can consider this to be a break of structure or initial chalk formation. This is the initial chalk formation, guys. And again, the market here broke another structure towards the downside here. You can consider this structure towards the downside. Or you can consider this structure, which actually broke rejection of price from 200 moving average and the 21 moving average and the 9 moving average, and the market clearly broke this structure. You can consider this to be a clear break of structure. And if you consider this impulsive momentum towards the downside, and if you try to plot the fib levels, the common point between this to the common point between this, you can see the 550 levels over here, where the market again rejected price from these levels. This is the 550 level where price retraced to this level and rejected price from that levels. So let's try to mark the 550 level over here. And you can see here, guys, the market clearly broke this low. And if you consider this momentum, the high of this candle to the, if you consider the common point between this to the common point between this, which I have marked you can consider this to be the 550 levels over here, where price is rejecting. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 4.26 level. This is the initial target where you could have targeted, guys. You can see how the market came all the way to 4.26 level, or as long as the market is trading below the 9 as well as the 21 moving average. Here, the market tried to break the 21 moving average, but failed, and the market tried to head towards the downside. And you can see clearly how the market rejected price from these levels and continued further. So you could have easily taken a short position here, guys, keeping your stop loss just above this 21 moving average, and you could have targeted all the way to 4.26 level. Here you can see some kind of manipulation which took place, seeing some sort of demand over here, but here the market rejected price from these levels and continued further selling towards the downside. And you can see clearly, if you consider this swing momentum, the market didn't even retrace to 0.38 level, clearly signifying bearishness. And after seeing this kind of huge bearish candle at around 21 moving average, you could have easily entered short position, keeping your stop loss just above that candle. And you could have traded this retracement level, guys. So if you consider this retracement level, the high of this candle to the low of this candle, you could have targeted the 1.68 level or the 2.6 level. Or in case if you could have targeted, you could have targeted all the way or the midway between the 1.6, 2.6 or the 3.6 level. You can see how the market came all the way to this level. This is the point level. Or you could have easily targeted this zone, guys. The 1.68 level is where you could have initially targeted. And you could have targeted the 2.6 level over here. Or you could have targeted this zone over here. Because there wasn't proper retracement, that's why you could have considered this. Or in case you can see this kind of order block level is, you can see the last up candle over here. So this is the last up candle over here. You can see price touch this order block and you could have easily entered short position, keeping your stop loss just above that candle. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move here or the midway between the 100% or the 1.68 level. You can see if you try to plot again this zone, guys, it coincides between the 1.6 to the 100% move, clearly showing some kind of support at this zone. So you could have easily targeted all the way to this zone, guys. This is where you could have easily targeted. This is about Nifty 50 trade analysis, guys. You can see how I usually trade. Let me explain to you from first, guys. You can see clearly the market rejected price from this anchor VWAP level, clearly signifying some sort of bullishness. And the market, after rejection of price from this anchor VWAP level, the market clearly broke structure towards the upside, which fair value gaps, or you can call it as imbalance. And you can plot this 1 minute order block. In case if the market closes below this 1 minute order block on price rejecting from this 21 moving average, you could have expected some kind of bearish candles like this, which usually with imbalanced market might close below these levels. And only then you could have looked for short setups. But here you can see after this kind of huge bullish candles, which fair value gaps, the market retraced, mitigated these levels. This is the 1 minute order block and try to head higher. And if you try to plot the fib extinction levels of this level, the common point between this to the common point between this to the common point between this, you could have targeted the 2.6 level. This is where you could have easily targeted. And after this, you can see this kind of bearish engulfing pattern where the market here rejected price from these levels and uh, from this level and trying to head towards the downside. Here you can see clearly the market broke this 200 moving average as well as the 21 moving average towards the downside. And clearly, market even broke this swing close. And again, the market retraced, rejected price from this 200 moving average, the 100 moving average, the 20 moving average, and closed and even broke this structure low. And if you consider this swing momentum, which broke these levels with fair value gaps, here you can't consider this break of structure because there wasn't no fair value gaps, guys, and there is no imbalance candles. But you can consider these three candles over here, which formed, and clearly the market broke the structure with fair value gap. You can consider this kind of momentum as the order block levels, guys. But this momentum, even though the market here with this impulsive momentum towards the downside broke this low, you can't consider this. That's why I have considered it this momentum. And if you try to plot the fib levels, the common point between this to the common point between this, you can see the market came and rejected price from this 50 levels or the 21 moving average where the price rejected, and you could have just placed your stop loss just above this 21 moving average and the 50 levels, and you could have expected the market to continue further selling towards the downside. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted all the way to 4.26 level. This is where you could have easily targeted. And after this kind of target, right, you could have expected some kind of reversal. So in case if the market tried to retrace, the market might face rejection from 0.38 level, or the market might face rejection from 550 levels of this huge impulsive momentum towards the downside. So if you consider this common point between this to the common point between this, you can see here the market found another bearish engulfing pattern, breaking this 21 moving average, 9 moving average towards the downside, clearly signifying some sort of bearishness. And the market showing some kind of liquidity as well. You can see this kind of trend line liquidity clearly broken. Or in case if you can place the anchor VWAP levels here. So once if this anchor VWAP level is being broken towards the downside, and on retracement, if this anchor VWAP level facing some sort of rejection, you could have expected downward momentum. But this is kind of a late indicator, guys. You can see you could have easily taken at this candle itself. Anchor VWAP levels are just for confluences. So in case if you want any confluences for you to take the positions, guys, only then you could have easily placed the anchor VWAP levels. You can see rejection of price from these levels, rejection of price from these levels. So after this kind of rejection, you could have easily taken short position in Nifty 50 as well. So you can see after this kind of candle breaking both 21 moving average as well as 9 moving average towards the downside, you could have entered short position. And for target, you could have easily targeted this swing level, guys. If you kind of draw these retracement levels, you could have targeted the 1.68 level over here. This is the 1.68 level where you could have easily targeted, or you could have targeted the 2.6 level over here. So you can consider this 2.68 level as another target, or as I've told you, you could have considered the fib of this 2.68 level on the 3.618 level. Or you can see you could have targeted this level, and you can see after this the market took support from these levels and continued further bullish momentum. But here this is an order block level where the market rejected price from these levels and clearly respecting this order block level, guys. So after this kind of bearishness, you could have easily entered somewhere here, or after rejection of price from these candles, and you could have targeted all the way towards the 1.68 level here. If you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this is the 1.68 level, guys. But I have told you the mid of the 1.68 level and the 100% move. This is the mid. So you could have easily targeted this low, guys. This is the Nifty 50 trade analysis, guys. I hope you are getting what I'm saying, guys. Let's look into Bank Nifty trade analysis, guys. In Bank Nifty, you can see the market gapped down aggressively, a 320 points of gap down, guys, which is a huge gap down. But as soon as the market gap down, you can see the market showed some kind of bullish sentiment and clearly rallying towards the upside. And if you look at a 5 minute time frame, you can see the market even breaking this 5 minute 200 moving average zone as well. But before that, you can see the market trading above the mid of the first candle, the 5 minute zone, and the price rejecting from these levels, guys. You can see here the price rejected from VWAP levels. This is the day VWAP level. Here the price rejected from VWAP level, and here the price rejected from VWAP level. But you can see after this rejection of price, the market clearly broke this structure high. You can see clearly the market here broke the structure high. You can consider this to be a break of structure, and you can mark the down candle over here. This is the 1 minute order block level. And you can see the market retraced to this 1 minute order block as well as the anchor VWAP level. This is the day VWAP level, rejection of price from these levels, and a doji candle formed here, guys. And after this candle, you can see a huge bullish candle. You could have easily entered long position here itself and targeting towards the upside. So if you try to plot the fib extinction levels, the high to low to here, you could have easily targeted the 1.68 level over here, guys. You can see this is the 1.68 level where you could have easily targeted long position here, keeping your stop loss just below this candle and targeted all the way to this zone, guys. This is the first trade setup where you could have taken here. The market clearly broke the structure high with the huge bullish momentum as well as a small fair value gap. But here again, the market retraced here, took support from this day VWAP level and continued further bullish momentum. And after this bullish momentum, guys, you can see clearly here that the market, in case if the market sentiment would have been bullish, you can see if you consider this swing momentum, the low to high of this candle, you can consider, see, this is a 0.38 level where the market took support here. In case if the market sentiment would have been bullish now, guys, the market after taking this support and after seeing this kind of huge impulsive candle, the market would have clearly broke this high, but the market failed to break this high. You can see clearly after this kind of huge impulsive candle, you could have expected another impulsive candle like this with fair value gaps or some kind of bullish sentiment breaking this high and closing above that candle high, guys. But what actually happened is that the market here was not able to break this high, guys. And instead of that, the market clearly broke towards the downside very aggressively. You can see this candle which broke both 9 as well as 21 moving average and closed below that zone. And here you can see the market clearly broke this low as well. Initially, the 0.38 level acted as support. Now it formed a chalk over here, clearly signifying some sort of bearish sentiment, guys. And you can see after this candle, you could have easily entered short position here, keeping your stop loss just above that candle high and targeting all the way towards the downside. This is one good setup where you could have traded. But if you consider this swing momentum, guys, the common point between this, the common point between this to the common point between this, you can see the price rejecting from 0.38 level. You can see this is a 0.38 level where price is rejecting. And after this rejection of price and the market clearly again broke structure towards the downside. So you can see clearly this is another break of structure. Or in case if you could have easily plotted the fib extinction levels here itself, guys. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move, the 1.68, the 2.61 level, or the 3.61 level. You can see how the market came all the way to 3.61 level. In case if you might have entered here, guys, and you could have traded as long as the market is trading below this 21 moving average. But in case if you might have missed here, you can see another break of structure over here. And you can see, you can consider this to be another order block level. You can consider this to be a 1 minute order block. And the market again retraced to these levels, but here it faced rejection. And in case if you want to find out the fib extinction levels, guys, the high to of this candle to the low to the high of this candle, this is how you could have traded. You could have traded all the way to this zone, guys, the 4.26 level, or the 2.68 level is where you could have initially exited your position, or you could have traded all the way to this zone. Taking short position here, guys, keeping your short stop loss just above this day VWAP level and targeting all the way towards the downside. This is one setup where you could have taken, guys. This is here also you could have easily entered short position after seeing this kind of rejection, keeping your stop loss just above this 200 moving average and targeted all the way towards the downside. This was one entry. This is another entry where you could have easily taken. And you can see here the market kind of retraced, guys, towards the upside. And if you consider this swing high to the low of this candle, you can see price rejecting from 0.38 level, clearly signifying some sort of bearishness. And after this kind of rejection, guys, you can see this candle which actually broke the 9 as well as the 21 moving average. And for better confluence, if you try to plot the anchor wave levels, you can see the market clearly breaking and closing below this zone. So in case if you could have entered short position here, keeping your stop loss just above that candle, and if you try to plot the fib extinction levels, guys, the common point between this to the common point between this to the common point between this, you could have targeted all the way to this level. This is the 100% move where you could have easily targeted. And this is a short trade to all the way to this zone. This is where you could have targeted, guys. And you can see where the market here rejected price from these levels. And market is trading was not able to close below these levels, guys. This is the 1 minute order block level. And you could have easily, after seeing the market came all the way to this order block level, rejected price from this anchor gap level. You can see after this kind of huge belly sentiment, the market was not able to close above this high, and there is some kind of resistance over here. And you can see following candle which broke towards the downside. So you could have easily entered short position here, or you could have entered once if this 21 moving average has been broken towards the downside, keeping your stop loss just above that candle and targeting all the way to this swing low. This swing low is where you could have targeted, guys. This is another trade setup where you could have taken. This is about Bank Nifty trade analysis, guys. I hope you're understanding what I'm saying. The first trade setup was this, the order block level. Once this order block has been mitigated, this doesn't hold any value, guys. Even if you can see the market here took support here and retraced, but this support is not the real support, guys, because the order block here has been mitigated. And again, the market took support from this anchor day VWAP level and came all the way to 1.68 level. The market failed to took support at 0.38 level over here, failed to make an higher high. Instead, market made a lower low, changing the market sentiment from being bullish to bearish, and rejected price from 0.38 level of this swing structure and even broke this structure low. Again, retraced all the way to this level, and here the market rejected price and continued further selling towards the downside. If you consider this swing, the market again retraced to 0.38 level, and here the another bearish candle breaking the 21 moving average, 9 moving average towards the downside and closing below that zone, where you could have taken short position and you could have traded all the way to 100% more. And here is another trade setup where you could have taken after seeing this kind of resistance of this anchor gap level. Is where you could have traded, guys. And this is about my Bank Nifty trade analysis, guys. If you find my videos helpful, please like, share, and comment. Share with your friends and family, and uh, share with your trading friends as well. And please leave a comment below. So if you want to suggest me anything, or if you want to keep in touch with me, you can have handled my Instagram over there. So you can easily message me through Instagram. That's it, guys. Thank you.